Alright, welcome back, and today we're going to be talking about IRAs and how you can use them towards your retirement. And specifically, we're continuing our series on the 30 days of Navy Federal. Now, once again, you have to research whenever you're looking into your retirement savings account. These accounts are going to be long term. They're going to affect you throughout your lives. The decisions you make right now are going to continue to affect you throughout the rest of your life when it comes down to your retirement. When it comes down to these, once again, long term saving, flexible contribution amounts, which means that you can deposit different amounts as you please. And of course, please be an early saver. The APY on these accounts is 0.25%, which is a pretty decent annual percentage yield. You have three main types through Navy Federal, and which kind you're going to choose is definitely going to depend on your current financial situation. Please seek out a financial advisor for your for some assistance on how you're going to do this. However, it's pretty simple as to the way that you're going to pick your IRA option. For most younger people, your best option at hand is going to be your Roth IRA. Typically for people who are already set in their career and older, it's kind of a 50-50. You definitely are going to want to seek out some advice there. People later in their working years may want to use that traditional route because there may be some advantages there. However, again, there's still may be some advantages in this Roth sector. But I'm just here to give you guys basic information on what's offered by Navy Federal for them. So, of course, with the traditional IRA, you can contribute to it anytime until you're 72 that you're earning income, which is great. You can make tax-deferred growth and tax-deductible contributions, which means that when you actually put money into your account, it can be written off on your taxes. However, as you guys can probably tell, that can bite you later on down the line, especially if you're younger, because when you go to withdraw your money, you're going to pay your taxes upon your withdrawal. And this is why a lot of people steer clear of this option. This next option is going to be a very great option for a lot of you all, especially for people who understand once you have that money sitting there accruing this interest for this long period of time, and then you go to pull it out and you got to pay taxes on all of it. It can really be a rough situation. So again, this one is best for individuals who have maxed out their employer-sponsored retirement plan, individuals who are beginning their retirement savings journey, and individuals who may not have access to a workplace-sponsored retirement plan. Now, for your Roth IRA, you pay the taxes now. You withdraw the funds tax-free when you retire. You get a tax-free qualified withdrawal, tax-free growth, and you can contribute at any time and at any age with earned income. The only issue really with this one compared to the other one is you're not going to get those tax deductions. However, you really are getting a huge tax reduction because you don't know what the tax rates are going to grow to later on when you have to pull these out, and these people are going to have to pay those taxes upon the withdrawal. This is for individuals who expect to be in a higher bracket when they're taking withdrawals. So, of course, if you're saving all this money up throughout your career, the idea is that you're going to be, that's everybody's real goal, is to be in a higher tax bracket, once they're retiring. So your goal is to be in a higher tax bracket when you retire. Again, look towards this Roth, that's more than likely going to be your option. And individuals who are beginning their retirement savings journey. Now, this last one here, this one's an interesting one that you've probably never heard of, which is a SEP plan, a simplified employee pension. I could really do a whole video just talking about this one particular plan all by itself because it is such an amazing option for a lot of people. This is going to be for people who are self-employed. You know, these SEP plans are growth tax deferred until retirement. Then once you do retire, your distributions are taxed as income, which can be good, can be bad. You can contribute anytime to your own and to your employees' SEP plans. So if you're a business owner and you have employees, you can actually build them out retirement plans, and you can actually contribute to their retirement plans, which is really cool. You get elevated contribution limits, and of course this is going to be best for small business owners and people who are self-employed, and individuals who want to take advantage of the tax deductible contributions. So definitely you guys stay tuned. We're going to be talking about some of these other options later on for retirement savings, but today I specifically wanted to talk about your 3 forms of IRAs that are offered through Navy Federal, which is going to be your simplified employee pension, as well as your Roth IRA and your traditional IRA. With all of that being said, and all that huge mouthful and everything to take in and think about, definitely think about your options. Definitely weigh out your options and figure out what's going to work best for you, whether it's traditional, Roth, or the SEP. And please make sure that you stay tuned for my upcoming videos where I'm going to go more in depth on some of these topics and bring you guys some more information. I'm going to be continuing this series as well as some other series to bring you guys that core knowledge that you need. And as always, thank you all for tuning in, and peace.